You may have started to notice, I have, more for sale signs popping up in your neighborhood over the last several weeks. Inventory has increased by more than 28%.
Are you looking to buy a house in Canada soon? Then keep on watching, because by the end of this video, I promise you will have all the information that you need to start the process of buying a house in Canada. And even if you're not thinking of buying anytime soon, you'll still need to arm yourself with the information in this video for whenever you're ready to take that step. Guys, nothing beats the feeling of getting a hold of the keys to your first Canadian home. Just walking through the first door and knowing that it's all yours is truly satisfying. Trust me, I know that feeling. But on the other hand, starting the process of buying your first home in Canada can really be intimidating, as it will probably be your first biggest financial purchase in Canada like it was for us. It can be a lot to wrap your head around, all right? But it doesn't have to be that difficult if you know what to expect. And that is the reason why I am making this video, to walk you through and break down the 10 essential steps of buying a home here in Canada, so that you know what to expect. And I also want to ensure that you don't fall into the traps that many people in the past have fallen into. I'm going to be sharing our personal experiences and of course answer all your questions as we go on this video. So go ahead, grab a cup of coffee or energy drink or water and let's get right into the video. The first step to buying your first home in Canada is to plan your finances. This might sound like a broken record, but guys, it is the actual first step. It is one of the important first steps to starting this process of buying a home. And I'm talking from experience. Don't put yourself under any kind of pressure to buy a home in Canada. It's not worth it. Don't hurry into it, right? Take your time and plan. See, you don't need to have all the money. You just need to plan. Planning your finances will save you a lot of stress in the future. Just because you have the down payment to pay for a house doesn't necessarily mean that you're ready to jump into buying a new house. You want to make sure that in addition to having enough money for your down payment, that you have enough income to be able to make your mortgage payment, and also that you have some of the money saved up for an emergency fund. Because when you own a home, there are going to be expenses, guys, that you would not expect that would come up down the road, and those expenses are going to cost you money. So you want to make sure that you have at least some sort of funds set aside for that, especially in the unlikely event that you sort of lose your job, so that you're able to dip into that savings, to keep you going or to keep your mortgage going. Okay, so it is important that you not only have your down payment saved, but you have at least 3 to 6 months worth of living expenses saved as well before you jump into the market. So it's very, very, very important. See, the reality here is that you want to make sure that you don't lose your home that you end up buying in any event or in any unforeseen circumstances. So evaluating your financial readiness is more than just about creating a budget and having a down payment. It's about looking at the worst case scenario that could possibly come up for you and making sure that you're also prepared for the unlikely event that happens. The next step in the home buying process, if you have not already done it, is to save a down payment. The least possible down payment for a new home in Canada is about 5%, and of course is 5% of the total cost of the home, right? So once you can pay this amount, you have a sizable mortgage, but you would also might need to pay for mortgage default insurance. If it is possible and you can afford it, it's advisable to make a larger down payment if you can. So if you can pay up to 20% and above, you wouldn't have to really worry about the mortgage insurance, which someone going for the 5% option would have to pay for. Also, a newcomer who does not have any credit history, which is a major requirement for mortgage approval, can still buy a home in Canada if they can afford a higher down payment, usually around 35% of the total cost of the home. Okay, now let me break down this percentage for you a little bit. Let's say you are looking to buy a house that costs about 750,000 Canadian dollars, right? Here are the options available with different down payments to go with it. Okay, so if you go with the first option, which is the 5%, the down payment will be around 37,500 Canadian dollars with mortgage insurance. they have a way that they calculate that. All right. So if you're going for the second option, which is a 20%, the down payment amount for that for a 750,000 Canadian dollars house would be around 150,000 Canadian dollars, right? If you can afford the second option, it means that you have a good chance of being exempted from having to pay the mortgage insurance. The third, which is the 35%, would also give you a down payment amount of 262,500 Canadian dollars. Okay, so newcomers without credit history can explore the second and the third option if they can afford it. Now, here is a whole bunch of ways you can save for your down payment. You can take advantage of the RRSP, where you contribute money, get a tax rebate, and at the same time have the ability to pull the money out in the future in order to buy a house. Or better still, you can take advantage of the brand new first time home buyers program, which gives you like the benefits of both the RRSP with the tax refunds and the home buyers account. Okay, for the first time home buyers program, you can contribute to the account and at the same time have the ability to pull the funds tax-free, and you don't have to pay them back. For your RRSP, when you pull the money out there and use it towards buying a home, you will need to pay it back within a period of time. I think a period of 15 years. But for the FHSA, you can pull, after saving for a period of time, you can pull the money out, use it towards buying a home, and you wouldn't get taxed or you wouldn't have to pay back. That's the difference between the FHSA and RRSP. So I'm going to tell you right now, using the first time home buyer savings account combined with an RRSP and of course an employer matching that amount you're contributing to your RRSP is the fastest way to save your down payment, because you will be getting those tax refunds that would also help you increase the speed at which you can save your down payment. The next step is getting pre-approved for a mortgage. Many people think that this is something that you should do about 60 to 90 days before you purchase your home. That is probably not accurate. The reason is because the sooner you get a pre-approval, the better information you would have to ultimately make your buying decision. Okay, so if you think that you may be buying or purchasing a home 2 or 3 years down the road, it does make sense to get pre-approval right now, because then you'll have a complete picture of how much you qualify for, and if there's anything on your credit or anything with your income that needs to be sorted out, a mortgage broker will be able to help you determine what those things are well before you actually get into the process of buying a home. So it gives you ample time to fix those issues. And yes, I said it, use a mortgage broker instead of a bank. I think at this point it's safe to say that banks are there to make money for shareholders and don't necessarily have your best interest at heart. But a really good mortgage broker will be able to make sure that you not only get the right mortgage, but that you get it with the right lender, especially in an environment where interest rates are going down, going up. This is so important, and I cannot emphasize how important it is, because things that you may not be aware of, like high payout penalties at the big banks, could come back to haunt you if there is any opportunity down the road to get a lower interest rate. Oh, and one other thing on pre-approvals is make sure that when you get that pre-approval, that they ask for all things like your down payment verification, income documents, and that they also fully underwrite the pre-approval and verify it with documents, all right, that you provided. Okay, so that when you're ready to go buy a house, you don't have to worry about getting a lower rate on your mortgage home, because you're already going to get approved for that mortgage. Okay, just make sure that they are reviewing your documents and those documents that you submitted to them support the pre-approval. Okay, step 4 is, now that you've gotten your pre-approval, the next is to budget for additional costs. Guys, this is very important. Things like property taxes, property insurance, things that you might think that are not going to be there but are very important to consider, because there are lots of people that end up buying a first home that don't realize that there are other expenses involved. So you want to make sure that those are factored into your budget, and you're not just assuming that there's going to be a mortgage payment and there's going to be all the other costs associated with owning a home. You just don't want to assume that. You want to know exactly how much they are and plan and budget towards them. You need to go a little bit deeper than that and make sure that you are factoring in all the additional expenses that come along with home ownership. Go ahead and check out Google. Just Google the additional expenses to owning a home in Canada above the mortgage cost, and you'll have a bunch of information there. You need to do your research. The next step is to hire a real estate agent. I cannot emphasize how important this is. You need to make sure you have somebody who represents you and who is looking out for your best interest in the home buying process. There may be temptation to go online and search for houses and find somebody on the internet to show you those houses, or to drive by a house and say, hey, that one looks really nice, and go ahead and call the number on the for sale sign. You shouldn't be doing that. You shouldn't be the one doing all that work. You need to interview agents, find out one that you believe is going to look out for you and be on your best interest, and have them do all the work for you, because it just saves you a lot of stress and it helps you, right, not to make minor mistakes. Okay, a great agent that is there to look out for you and your interests will not only save you a whole bunch of money, but it will also make sure that you don't make any silly mistakes, like buying a home that is on the right of the way for a future highway that is going to be impossible to sell once that highway is built. Those are the little details you might not know, but a real estate agent will know. Or any other number of potential issues that you probably might not realize immediately. Okay, now the sixth step is to begin your home search. There are different types of homes here in Canada, and each of them has its price. Okay, I'm going to go ahead and tell you different kind of houses. We have the condo. So a condo is best described as a unit within a large building. So if you're purchasing a condo, you don't have to buy like the whole building or the entire property. Condos are always the best available option in busy city centers, like the downtown area in Calgary or downtown area anywhere. Okay, the next type of house we have in Canada is called the single detached home. Okay, this is best described as a structure situated on its own, all right, and does not share any wall with any neighboring properties. Okay, so once you buy it, you own both the land and the building. Records show that this is the costliest type of housing here in Canada. Yes, especially when you have the double garage, single garage, but they are single laid out homes. Okay, then you have the semi-detached. Okay, this is like a detached home, but the only difference is that it shares a wall. So instead of standing on its own, it shares a wall with a neighboring home. Okay, this type of house we have here is called townhouse or townhome. It is a home that is joined to other homes on both sides. Okay, and you can find them in most major cities here in Canada. The last but not the least is the duplex. This is a single building that has been shared into several different units. Okay, so buyers buy the 2 units and rent out one, but I think that you can buy just 1 unit out of the 2 if you'd like. Let me know in the comment section if you would like me to bring a real estate agent and a mortgage broker at different times to elaborate more and answer all your questions on this. Let me know. I want to know in the comment section. So you've got a real estate agent, you've told them what you want, they've set you up on a search, and they're sending you listings that meet your criteria. And then what you want to do from this point is you want to have a great filtering process. Guys, I know what I'm saying this. You need to know exactly what you want in your head, what is important. Okay, the trick here is to only view those homes that are highly likely to meet your criteria. You don't want to start up the search process and start looking at different houses. Some people see from 30 to 40 to 50 homes, because 1, it takes a lot of work, and 2, it can create a lot of confusion, because when you see a whole bunch of different houses and you can't really remember what the last one was, it can be confusing. All right, so you want to make sure that you narrowed it down before you start searching. Know exactly what is important. Must I have a home office? Must I have a room upstairs? Just know what is important. What size of rooms can I manage? What size of room would be pictured small or too big for me, just so that you know exactly what you're looking for and narrow down your search. And then once you've narrowed it down, you are able to at least view 3 to 5 houses. It helps you a lot. And if you find one that you love, go ahead and write an offer. And if you don't, then reevaluate your criteria so that next time you go out and look at 3 or 5 more houses, you're more in line with what you want. The 7th step in the home buying process is, once you find the house that you love, make an offer. This is where a great real estate agent comes in. If you get a good one, he or she will save you a ton of money by, of course, being a good negotiator and knowing how to get the best deal possible for you. Now, here is the thing. The difference between a good realtor and a great realtor is their negotiating skill. So make sure that you interview them, ask them some questions questions before hiring them, okay? The key thing here is that you want to find realtors that are the best negotiators so that they can advocate on your behalf. Now, when it comes to time to do the home inspection, you want to make sure that you hire a great home inspector, somebody that your realtor trusts, because most consumers don't have like home inspector in their back pocket. So you need to go with the recommendation of your realtors. They will know who is the best ones for this. Please do not skip this step. Make sure that you get every home, every condo that you purchase, whether it is brand new or whether it is something that has been that is a resale. Please do make sure that you get a home inspection done. All right. Now, the ninth step in the process is to secure your mortgage. So once you've written your offer, you send it off to your mortgage broker. They will then go through the process of helping you choose a mortgage. They're not going to do the choosing for you. And if you have a mortgage broker who starts to choose a mortgage for you, or maybe would tell you which lender that you're using for you, then you need to run at that point, because their work really is to help you choose. Okay, a great mortgage broker would present several options to you. They will help you choose the best mortgage option, the best type of mortgage, and the best lender. Okay, but ultimately they're guiding you through the process. You're not the ones doing it. Okay, you're the one making the decision, and their job is to go out and obtain the mortgage that you instruct them to. Once they've sent the mortgage off to the lender for approval, the lender should come back having it fully approved because you got a pre-approval before. Okay, and the broker, being competent, did a pre-approval, which should of course give you a high likelihood of getting the actual approval. And then the lender might come back. They might ask for additional documents if what you have provided to your broker previously aren't the exact documents that they need at this point. Okay, and then you can provide that for them. Usually it's part of the process. Okay, now the last and the final step is to meet your lawyer. Once the mortgage is all done and you've waived your conditions on your offer to purchase, everything will be sent to your lawyer for about 7 to 10 days. I don't know how many days it works now, but it's usually 7 to 10 days prior to your closing. Okay, so the lawyer would draft up all the documents to transfer the property from the previous owners to you. Also have you sit at a signing table to go through everything and then sign on the dotted lines to make the actual purchase. At this stage, you'll be asked to bring in any additional down payment money that you have saved. You will send it to your lawyer's office so that it can be transferred to the seller of the property along with the mortgage funds from the approved mortgage if you have one, and most people have one. Once the money has been transferred and your down payment money transferred to the sellers, lawyers will confirm with the buyers and they would mutually agree to close the deal, which means at this point in time, you'll be able to get your keys from the realtor, which leads you to the actual last step in the process, which is closing the deal. All right, this is where you're going to get the keys. You get to move into your home, you get to transfer all your utilities over to the new property, and you get to change your address for all your mail, and you get to actually take possession of your home. And that's it. It's really that simple. Obviously, it's not that simple, but it is the basic 10-step process. If you found this video helpful, please hit on the like button, subscribe to the channel, and share it to people around you. Your support helps the channel grow. Also, if you like this video, you might also like the next one that I'll be linking here. All right, so just go check it out and thank me later. Thank you so much for watching, and see you all in the next video. Bye.
You're not letting me